trading a Robinhood account from $3,000 all the way to $1 million, and I'm showing you every step of the way how I get there. As of Friday, November 19th, we closed the account at $24,548. At our peak, we are around 39K. So we've taken a really big step back in the account, and that's just really due to the fact that growth has sold off so much. If you've been following along in the news, like the whole market is collapsing. The economy is going to shambles right now. You and everyone you know are going to be broke and homeless and live on the street. The AI bubble has completely collapsed on itself. We are in the throes right now of the dot-com bubble 2.0, except it's 10 times worse. Obviously, I'm kidding, but a lot of people who are following me and commenting or even just on the internet are all assuming the exact same thing. Now, that's completely irrational. Obviously, on Wednesday, NVIDIA reported earnings and we had this massive gap up. Jensen called out that a lot of people who were saying this was all just an AI bubble. That's not what they're seeing. They're seeing extreme levels of growth and demand requirement, and it's not stopping. They think they're in the early innings. Now, in the early morning session, we did gap up. We were up 2% on the S&P 500, and a lot of people were like, oh my God, the bottom's in. And what happened? Lisa Cook, one of the Fed members, said that maybe market valuations are too high and maybe they won't cut rates. And the odds of a rate cut dropped 30% to 30% for December, 25 bips. And what happened? The whole market sold off from peak to trough 3.5%. This has only happened maybe like 4 times in the history of the S&P 500. So pretty unprecedented move there. And then on Friday, we found a bit of a floor. We filled this previous gap at 652 that's remained open, and then we bounced. And that was a similar pattern that we saw on the S&P 500. We had a gap in futures, and we actually came back down and filled that over here as well. And same thing on the NASDAQ. So that was pretty important. We filled those gaps that remained open, and now we're trying to bounce out and reclaim some levels. The S&P 500 closed right on the line. The NASDAQ 100 closed below the line. So we're still not out of the woods yet. I would like to see the S&P 500 continue to climb. But Bitcoin is starting to find a bit of a floor. It almost hit below 80K. So sorry for all the Polymarket boys who are betting that it would drop below 80,000. But we are starting to bounce. We're already at 87K. This is on Sunday, right? So 3% move. That's usually a pretty bullish sign that at least the S&P 500 futures are going to open green, and we'll see if that can continue. Sorry, I can't speak. But as you're seeing here, this move is like a 37% drop from all-time highs on Bitcoin. If you zoom out, we're still very much in an uptrend, right? Higher lows and higher highs each and every time. Now, as long as we kind of hold this area, we don't break below those more recent lows in April, then we're more than likely to continue to push higher back towards 100K. Now, it's possible for whatever reason we could reject here and head again lower. By no means I'm an oracle and I can just predict all the price moves, but I'm still very much in the camp that we're not going into a recession yet. Most people are calling for the end of times, but that's not what I'm seeing. Now, rate odds did jump all the way back up to 70%, really on no information, right? It's just kind of all over the place. Even the market doesn't know what's going on. We went from 71% to 69% from Friday to Saturday to Sunday. And then we were, a week ago we were at 40%, and a month ago we were at 91%. So no one really knows what the Fed's gonna do, and that's just because we don't really have the data. But I do think they're gonna end up cutting 25 basis points no matter what in December. We'll see if I'm wrong on that. Now, it's pretty normal for there to be pullbacks in the market. As you can see here, there's always been like 5 to even 10% moves over the last, since 2009. So you can see that the market does have these pullbacks, and it still can continue higher. Obviously the drop in April was just due to like artificially setting all these tariffs and then rolling them all back, and then the market rallied. in 2022, the real drop there was because the Fed was tightening, right? They were shrinking the balance sheet, they were raising rates, and that was the reason we had a more long drawn out bear market. I don't see that the case now. The Fed is actually lowering rates. They're controlling the money supply. It has to go somewhere. Just because a bunch of people are in panic and extreme fear right now, which hit a 7 on Friday morning, that doesn't mean that we're going to just continue to fall, right? Most central banks around the world are printing money, and that ultimately gets absorbed into asset prices and continues to go higher. Now, the median S&P 500 stock is in a 16% drawdown, and most of the Mag 7 stocks have also sold off. So a pretty broad correction across the board here, but I do think that, I'm not really panicking like everyone else. I think we are going to continue higher. 23% of the NASDAQ stocks were oversold on Thursday. RSI below 30. Although we're only off 5% from all-time highs, it's acting like we're at the April lows, right? Like you can see how much people are trying to short the market, how much everyone's panicking. Now, just looking at the account and also hopping into the charts here, nebius continues to be the number one play in this account. A lot of people are still calling for 64. It bounced to $103 after Nvidia's earnings, and then it sold off with everything else. I don't really care. You can say that I'll make a prediction that nebius is going to be trading well over $120 to $130 by February. But, just to judge me on like a one-day move is kind of silly, right? We're ultimately investing and trying to make money over time. And in the short term, the market can be very irrational. But nonetheless, we are in at $89 a share, and then we're down $1,700 on options, down 5% on shares, and we're going to continue to accumulate as much as we can, especially if the price goes lower, even better for us. Now, looking at the chart here, it has been pretty aggressively, kind of all over the place. This gap continues to try to hold. We did fill one gap all the way back from November 2021, this little mini gap that remained open. We actually wicked down to it on Friday morning, and then we bounced. The market wasn't able to hold that much intraday, and it sold off into close. But now we are starting to see some positive developments. Now, nebius, it can go a bit lower. In the short term, it still has that ATM dilution offering, and then this 138.75 level is a convertible note level. So it's going to be hard to get through that level. But really, anything between 65, if somehow the market crashed, it could get there. But I seriously doubt it. We're already starting to see Bitcoin at least find a floor in the interim. But I'd really like to see this try to push back up towards $100 and get back up to this 115 level. If we can break back over this more recent red trend line, then that's very bullish, at least showing a bit of a false breakdown, and then we can continue higher. I would definitely be selling covered calls on positions the closer we get to like 125 to 140, but we'll see how things play out. Now, the reason the AI bubble is not done is because a ton of different reasons, but even now on Monday, we're looking here to see if Donald Trump is going to reveal plans of the Genesis mission, which is really just to boost AI development and infrastructure, which is bullish for nebius, right? They're now building in Vineland. They have land in Alabama. They're building a supercomputer for Israel. At the end of the day, they're really trying to get as much power online. They're even talking about the 3 Mile Island, getting nuclear reactors, trying to break ground on that. China's already broke ground on multiple nuclear reactors. So it's an all-out race for power and for infrastructure around AI. It is not a bubble. Funny enough, Jim Cramer also said that nebius, the pain in nebius is not over. It's all press releases on deals and nothing else. He also timed the top, funny enough, when nebius was around $135 on the recent price, when he said that maybe they need to consider looking at nebius, and then it sold off. And now, obviously, the rumor is that Jim Cramer, you just inverse whatever he says. So that was kind of funny. But we do know that Vineland is already up and running. The Data One CEO, Charles Antoine Binet, has already said that Vineland's phase 1 is complete. They also have a technological breakthrough that they're going to announce very, very soon. They're just waiting for one more sign off before releasing that information. So hopefully whatever that announcement is a very big deal, and hopefully that can help the stock price. But like I said, Vineland is already up and running. They're starting to recognize at least probably the first tranche of Microsoft's $17 billion deal. And then just other headlines around Anthropic's valuation increasing almost double in 2 months from 183 to 350 billion. And then here's just like a bunch of different things. Obviously, there could be more contracts announced with Anthropic, OpenAI, Oracle, or any others. Index inclusion, the MSCI is for nebius is being included on Monday, November 24th, and that'll be effective the following day, the 25th. So we'll see some at least passive flows and indexes start to buy nebius shares, which is all obviously bullish for the stock. And then Q4 quarterly results, more clarity on any other build out plans, any greenfield sites, more analyst coverage. You know, we're seeing a lot of analysts price this stock potentially like anywhere from like $130 all the way up to $211. People were also pricing the Microsoft deal from $55 to $62 per share, just standalone on itself. Obviously, ClickHouse is just growing rapidly. It's just becoming like the main tool for a lot of these AI data analytics platforms. And then, of course, these other subsidiaries, albeit small, are also growing at over 100% year over year. And then, you know, now we got the Genesis moon mission that Trump's going to be rolling out. So overall, very, very bullish on nebius and really any stock in the AI space. I don't think that we are at the end of it. I would say we're probably somewhere in the early to mid stage of it. And of course, if you aren't already, you guys can join the Discord. The link is in the bio. Really just a good community, and I post all my entries and exits in here for free. And of course, these are all just my own opinions. You guys got to do your own research, make your own decisions on the positions. I'm just showing what I'm doing. But nonetheless, very, very bullish on nebius. There's not any sort of immediate technical setup on this stock. It just keeps hitting around this $80 level and trying to hold. So we'd like to see this gap hold. It did fill this smaller one. I'd like to see it try to push back over $94. And then this gap was already filled. We just sliced right through that. So I'd like to try to get back through $94 to $100 and then get back over this red trend line. Hopefully we can do that this week since crypto's starting to rally. At least that's an early sign that maybe the market might be turning around. And then just looking at a handful of other stocks, like Unity continues to hover around this $39 level, which is very important. They just partnered with Fortnite, Epic Games. I would really like to see it come back up and fill over this 43.52 level and then continue higher. If you've looked at a lot of these Mag 7 stocks or just these really large mega caps, especially in the AI space, they've come down a bunch. They are getting to very interesting spots where maybe it is worth buying the dip on. Oracle has sold off drastically from all-time highs. It's down like 40+%. If it ever gets down into this gap between 176 to 189, that's a really solid area to start buying the dip. This is all the way back from 2 earnings ago, and a lot has changed since then. Their backlog is absolutely massive. And then like these smaller players, EOSE, this is just around energy storage, batteries. Obviously, Elon is very bullish on both solar and batteries. I think EOSE, with the backlog they do have over $20 billion, is still very much undervalued at $3.5 billion market cap. All of these stocks are growing very, very rapidly. And the US government also has an option to buy EOSE shares. But just looking at the overall structure here, we did kind of fill down into this low volume node. So I'd like to see us try to hold this area, right? This is where price held all the way back when it first IPO'd a few years ago. And so as long as it holds that 10 to 11.5 area, that would be a bit of a retest of this large bottoming breakout. And as long as it holds in that area, then it's a really good candidate to start reversing and then pushing back higher and hopefully get back up to around this $22 level, which is definitely an area I'd be looking to sell a lot of covered calls on, since that is at least the next area of major resistance between $20 to $22. And then TE, kind of a very similar pattern to EOSE, right? It's selling off a bit. You know, a lot of people are very afraid of the AI bubble, but I think that fear is overblown, and we're going to see a bit of a rally here. When the market does want to turn back to risk on, and a lot of these market makers step in and stop pulling bids and support price, it's more than likely that the growth stocks are going to rally the most. You know, I was shorting Rigetti at the start of this year, right? Like you can see all these drawings from back in the day when I was shorting it. We had a bit of like this big drawdown. It formed this rising wedge and then it broke down. We shorted it here, we shorted it there again. But over time, it kind of just held on its own. This is a zero revenue business. And what ended up happening, something that, to be honest, I never thought would happen, right? We went from $6 on this pullback and we rallied all the way up to $58, right? You know, I think that something similar could happen here in the late stages of this bull run. And really what does that mean, right? Like a lot of these high growth tech companies, I think are going to perform the most. There's been a lot of a rotation. Like people talk about the equal weight S&P 500, like RSP, you can see the ETF here. Like it had a really solid green day and there was a lot of other stocks participating, like specifically healthcare has been rallying quite a bit. This sector overall has performed very well after breaking out earlier this year, even though it's like lagged behind a lot of the other stocks, right? So you're seeing like a bit of a rotation underneath the surface, but when risk comes to the market, it's gonna pump a lot of the growth stocks that even corrected, right? Like Palantir has come down quite a bit. I still think it's extremely overvalued, but it's more than likely to continue to hold like this previous support area, right? As long as risk comes back to the market, a lot of these stocks will likely continue to push higher. AMD also came back down and started filling into this earnings gap and bounced out of it. That area is acting as a strong level of support. We could certainly come down to like this 188 level and retest the more recent high. That would be a great position to start scaling in for the longer term or playing some long dated call options. Everyone's talking about, you know, strategy, MicroStrategy. Michael Saylor is going to blow up. That's extremely unlikely. I was shorting MicroStrategy back in similar to Rigetti. In January, this bear flag was forming. We started shorting it here and it dropped all the way down to $227. And that area held as well. Most people were saying the exact same things, that MicroStrategy was going to be insolvent. They're going to have to sell all of their Bitcoin. They were saying the same thing back in March that they are saying now. Look at this massive sell-off. It's more than likely, even just looking at RSI and MACD, all of these things are trading very well below oversold levels. So it's more than likely we're going to have at least a relief bounce. And I'm trying to play that on MicroStrategy. We do have some call options in the 240 to 250 range for January. I think the recovery is going to happen a lot sooner than later. So I'm trying to go a little bit shorter on the dates to take advantage of that. And then, you know, overall, like yields haven't really done all that much. I know a lot of people are freaking out about Japan. You know, I've been kind of monitoring the Forex as well as the yields. I don't really think the Japan carry trade is anywhere near the levels it was when it had the big sell-off back here in August of 2024 and VIX hit over 65. I really don't think that we're going to see the same thing here. And then same thing with VIX now, like it is still very much elevated. So we are going to see more than a big swing, like more than a 1% swing on SPY, most likely every single day. You know, we had the 1% move here, and then the Russell participated really well on Friday just because there was a lot of a rotation. Like Walmart reported, did really well. And then I think Home Depot actually sold off on earnings, but that's starting to bounce. And then, you know, most people are pointing to J&J. I think UNH sold off just because of some of the political climate, around, what are they going to do with the insurance money, with the government and certain tax credits. But nonetheless, the market is rotating, and there's a lot of rotation out of growth, but I think a lot of the money that shows back up into the market is definitely going to go into AI. I don't think we're slowing down anytime soon. And then, a bit later, because of how much leverage is going to end up in the system, then we'll have a much larger correction in the markets. But for now, I'm still very much bullish. Now, I'll keep posting, guys. We're taking some hits in the account. We're trying to do the best that we can to minimize risk, but also prepare the account in a way that we can accumulate enough to participate in the next run, right? We've had a bit of a pullback, just like the market has in our account, but once the market finds a floor and bounces once again, then, we're going to participate in that. So trying to move away from some shorter dated contracts, mostly into shares and to stocks that we think are going to grow for the long term. And then, as long as we can weather the storm, then things are going to turn out for the better on the other half, in the next couple months. So hope you enjoyed this one. I'll see you in the next video, guys. Make sure you join the Discord and share with your friends. I'll see you guys. Peace out.